Good morning, ma'am. I am Chris and I want to present my view on the topic national income. National income concept and measurement. Agenda Introduction Basic concept in national income. Gross domestic product. Gross domestic product at constant price and at current price. Gross domestic product at factor cost and gross domestic product at market price. Net domestic product, gross domestic product, net national product, net national product at factor cost or national income, personal income and disposable income, real income, method of measuring. There are four types of method of measuring: product method, income method, expenditure method, value added method. National income. National income is the money value of all the final goods and services produced by a country during a period of 1 year. National income consists of a collection of different types of goods and services of different types. National income. National income, since these goods are measured in different physical units, it is not possible to add them together. Thus, we cannot state national income is so many millions of meters of cloth. Therefore, there is no way except to reduce them to a common measure. This common measure is money. Basic concept in national income: gross domestic product, gross domestic product at constant price and at current price, gross domestic product at factor cost and gross domestic product at market price. Net domestic product, gross national product, net national product, and net national product at factor cost or national income. First is gross domestic product. What do you mean by gross domestic product? Gross domestic product is the money value of all final goods and services produced in the domestic territory of a country during an accounting year. Gross domestic product. Gross domestic product is the market value of all official recognized final goods and services produced within a country, usually calculated on an annual basis. Like GDP. GDP means gross domestic product equal to C plus I plus E plus Z. C means consumer spending. I means investment made by industry. E means excess of exporter over import. G means government spending. Second is gross domestic product at constant price and current price. Gross domestic product can be estimated at current price and at constant price if the domestic product is estimates on the basis of an prevailing prices. It is called gross domestic product at current price. Conceptually, the value of GDP, whether estimated at market price or factor cost, must be identical. This is because the final goods and services must be equal to the cost involved in their production. Gross domestic product in factor cost equal to gross domestic product in market price minus IT plus S. Next is gross domestic product at factor cost and gross domestic product at market price. First is the contribution of each producing unit to the current flow of goods and services is known as the net value added. GDP, gross domestic product at factor cost, is estimated as the sum of net value added by the different producing units and the consumption of fixed capital. Conceptually, the value of gross domestic product, whether estimated at market price or factor cost, must be identical. This is because the final goods and services must be equal to the cost involved in their production. Gross domestic product factor cost equal to gross domestic product at market price. Net domestic product. While calculating gross domestic product, no provision is made for depreciation allowance, is also called as capital consumption allowance. In such a situation, gross domestic product will not reveal complete flow of goods and services through various sectors. A part of is there set aside in the form of depreciation allowance. When depreciation allowance is subtracted from gross domestic product, we get net domestic product. Net domestic product equal to gross domestic product minus depreciation. We got net domestic product. Gross national product. Gross national product is defined as the sum of the gross domestic product and net factor income from abroad. Thus, in order to estimate the gross national product of India, we have to add net factor from abroad income earned by non-resident resident in India to form the gross domestic product of India. In brief, gross net product equal to gross domestic product plus में net factor income from abroad. Gross national product, gross domestic product versus uh, gross national product. Gross domestic product is the total value of final goods and services product during a given period within the geographical boundaries of a country, regardless by whom the goods and services are produced domestically. Gross national product is the total value of final goods and services produced during a given period by the citizen of a country, no matter where they live. The goods and services are produced by the national of country. Gross national product. Gross national product (GNP) is the aggregate final output of citizen, the business of an economy in a year. Gross national product may be defined as the sum of goods, gross domestic product, and net factor income from abroad. Gross national product equal to gross domestic product plus में net factor income from abroad. Gross national product equal to C plus G plus export minus import plus में net factor income from abroad. Net factor income from abroad means difference between income received from abroad for rendering factor services and income paid towards services rendered by foreign national in the domestic territory of a country. Net national product. Net national product. Net national product equal to gross national product minus depreciation. It is the measure of net output available for consumption by the society. Depreciation means in the is the consumption of capital in the production process minus the wearing out of plant and equipment. Net national product. If the net factor income from abroad is positive, the net national product will be more than net domestic product. If the factor income from abroad is negative, then net national product will be less than net domestic product, and it will be equal when net factor income from abroad is zero. Net national product equal to net domestic product plus में net income from abroad. NNP at factor cost or normal and or national income. NNP at factor cost is the volume of commodities and services turned out during an accounting year, counted without duplication. It can also be defined as the net value added at factor cost in an economy during an accounting year. NNP at factor cost or national income is defined as the sum of domestic factors incomes and net factor income from abroad. If NNP figures is available at market price, we will subtract indirect taxes and add subsidies to the figure to get NNP factor cost or national income of the economy. NNP at FC equal to national income equal to FID plus net income from income abroad. FID factor income earned in the domestic territory of a country. Net factor income from abroad. Next is personal income and disposable income. Personal income and disposable income are two concepts of national income very commonly used. It is advanced countries. Personal income may be defined as the current income of persons or household from all services. Personal income is not a measure of production. Disposable income means all personal income is not all the disposal to be spent on consumption. Individuals have to pay personal direct taxes to the government. They are free to spend only the payment of taxes. Personal income minus personal direct taxes. Disposal income, the amount of money left after taxes. Disposal personal outlay. The disposal personal income may be spent fully or individually may say what remains after savings is called the personal outlay. Disposal income is equal to consumption and savings. Disposal outlay equal to disposable label income saving. Real income. Since national incomes does not reveal the real state of the economy, the concept of real income has been used to find out the real income of the economy. Base year is selected and the price level of that year is assumed to be 100. Method of measuring national income. The national income of a country can be measured in three alternative ways. First is census of production method. Second is as a flow of income, and third is as a flow of expenditure. Added to this, there is yet another method of estimating national income. First is product methods. This method is popular in USA and is called as a total product method or goods flow methods. In India, it is known as inventory or product method. In this method, the economy is classified into three transaction sectors like industrial, services, and foreign. Transaction sector where international payments are considered. We calculate the money value of all final goods and services. Produce is an economy during a year. The money value of these goods and services is calculated at market price. The sum total is calculated the gross domestic product at market price. Income method. Income method means we estimated the income earned by various factor services. Again, in the process of production, the sum of these income provide us the measure of goods national income at factor cost. Gross national product equal to wages and salaries plus rent plus interest plus dividend plus undistributed plus corporate profit plus mixed income plus direct taxes plus indirect taxes plus depreciation plus net income from abroad. Expenditure method given by Samuelson flow of product approaches. In India, it is known as outlay method. GNP is the sum of expenditure incurred on goods and services during 1 year in a country. We sum up the flow of expenditure in an economy to arrive a national income estimate. If we add the value of expenditure on all these items, we get the value of gross national expenditure market price. Value added method. In order to avoid double counting, value added at each stage of production should be calculated to arrive at GNP. The difference between the value of output and input at each stage of production is called the value added. By summing such value added for all industry in the economy, GNP can be found out. Last is conclusion. In conclusion, national income is a key concept in economies that refer to the total value of all services and goods produced in a country over a specific period on time. It is important to understand how national income is calculated and what factors can affect it in order to make informed economic decision. Thank you.